Good morning, traders. This is your professor here, live to give you a morning market update. So, hope you guys had a fantastic week so far. In the chat room, we gave an update on our trading status, and we've been very consistent this FOMC meeting minutes and the entire markets overall. So, be part of our community, and we will continue to share our success and stay up to date with our upcoming trade log that we will post every Friday. And we have 1 year of results, trades that are timestamped that you guys can always verify for your own records to see what kind of trades we do and how consistent we are. Now, besides all that, let's get into today's markets. So right now we see S&P 500 holding that 4130 and 4150 area, right? So the markets did pick up. We were definitely bullish yesterday, and we played a lot of the stocks on the upside. However, we had some plays that we took on the downside, such as Nvidia puts, and we gave some SPY trades as well. Now, the latest update right now is that bank earnings came out. Blowout quarter for JPMorgan earnings. So their earnings are actually up. Profit is up around 50%, and everything looks fantastic here. But one thing I want to mention here: whenever banks have a blowout quarter, you want to be very careful and ask yourself, why did they have this blowout quarter? Now, if you look at a bank that also reported earnings, Wells Fargo, and compare it with JPMorgan, what you will find is that Wells Fargo basically met, while JPMorgan pretty much beat and skyrocketed expectations. Well, the key thing is that you want to understand, okay, are they lending out more money? Are they doing something different that is attracting more customers? It all has to do with the current market situation we're in. I also tweeted that this is actually bearish, and I had a bearish mindset as well. So whenever banks have a massive blowout quarter that is concentrated in the largest U.S. banks, such as JPMorgan, this is actually a bearish situation going on, right? Because what it means is that capital is flowing out of other institutions and flowing into JPMorgan. Now, JPMorgan also mentioned that their loans are higher and their deposits are somewhat less. So in the overall banking sector. So what that means is that basically there's more financial risk in the marketplace, which is not so good for the overall banking sector. Okay, so we will see some modest incline in JPMorgan today as a short-term reaction, but overall the market will adjust to that news once we give it some time. So here's my overall sentiment. I think techs are going to have a big trouble today. We're watching the NASDAQ to see if it breaks below 13,000. Now, if that happens, you're going to see a big drop in all of the techs. Techs were clearly the biggest winner yesterday, but they could possibly be the biggest loser today. And that's what my key mindset is. I didn't swing any SPX calls or any SPY calls overnight, but we do have our Nvidia puts that we swung for next week's expiration because we see weakness in semiconductors. So semiconductors have a huge problem for today, and I think they're probably going to be the weakest stock for today. So you want to watch your Nvidia puts, see if Nvidia can break under 262, and if that happens, then you're going to see AMD decline, you're going to see LRCX decline, and you're going to see a lot of semiconductors are going to be weak. So what you want to watch is, does the declines in the tech sector, which represents a large portion of the overall S&P 500, between 40 to 45% of the overall weight in the S&P 500, does that decline in that sector basically outweigh the inclines in the banking sector, which represents approximately around 20% of the overall S&P 500? So very possible that techs, basically drag the market lower. And for today, the sentiment is modestly bearish. Now, going forward, next week is OPEX. Next week, we have a lot of tech earnings. Okay, so that will definitely shape the things of, how techs are and overall. And we've been seeing a lot of insiders buying a lot of tech into earnings. Okay, so a lot of senators and and key politicians are buying tech stocks into their earnings. So let's see how that goes along down next week. Tesla is also reporting, so just stay tuned for next week because it will be a volatile time. And the key options are suggesting that 4,200 may happen. So we may see a slight decline today and then a market reaction later on in the week because every day the market is adjusting to whatever news is available and the positioning is moving on the daily expirations, right? So yesterday we've seen calls definitely pick up the market, but now we could probably see some puts for the daily expiration. So these are all short-term moves. As traders, you want to be able to adjust and adapt to the marketplace. Yesterday we were playing calls. The day before we played puts at the end of the day and had calls in the beginning of the day. That was 2 days ago. So it's always important for this week to remain adaptive, and next week we probably see a similar situation as well. So that's all I got for you guys today. Hope you guys enjoy the call, but just watch JPMorgan, see if it gets beyond 3% overnight or 3 to 4%. That's when banks are going to be very strong. But if techs really drop, semiconductors are going to be the key weakness in the sector. And you also want to watch stocks like Snow and Tesla because those are going to be possibly a nice short play for today that you can do on your daily expirations. So thanks for tuning in, guys. We'll see you guys in the chat. Let's get that money.